Okay, let's unpack this. What if, what if the secret to making smarter decisions, in every part of your life wasn't really about complex financial models,
Right.
but more about a fundamental shift in how you actually think?
Hmm.
You might be sitting there asking, why do I need this? I'm not Warren Buffett.
Exactly. A common thought.
And that's precisely the question we're diving into today.
Hmm.
We've got some really fascinating source material here. It argues this investor mindset isn't just for Wall Street.
No, not at all.
It's about certain patterns of thinking that can radically change results across, well, all aspects of life, not just your portfolio.
And what's so interesting, I think, is how the original video we looked at contrasts the perspective of, let's say, an ordinary person with the really strategic approach of a major business thinker.
Yeah.
It just powerfully shows how different thinking patterns lead to wildly different outcomes, even if you start with similar stuff, similar resources.
Yeah.
This isn't just about money. It's about a framework for strategic living, really.
Exactly. Strategic living. I like that. So today we're going to dive into 7 foundational pillars of this mindset.
Okay.
And this is where it gets really interesting. I think we'll unpack a practical, 10-point checklist.
Oh, the checklist.
Yeah, something you can actually use to evaluate almost any decision. Buying a gadget, choosing a career, even navigating relationships, perhaps.
It's surprisingly versatile.
It really is.
Yeah.
So let's kick things off. Pillar number 1, possibly the most impactful, long-term thinking.
Yeah, this is huge. And it's not about tomorrow or next week or even next month.
Right.
An investor, in this sense, operates with a real future-oriented view. Planning, like 5, 10, sometimes even 15 years ahead.
Wow. That's a
And
long horizon.
It is. And it contrasts so sharply with the common short-term focus most of us tend to have. You know, the classic marshmallow experiment.
Oh, yeah, delaying gratification.
Exactly that.
Yeah.
Delaying the immediate reward for something much bigger later. That's the core idea here. Understanding compounding takes time.
So what does this mean for you, the listener, beyond just finances? I mean, how does that play out day to day?
Well, it means you can actually build more robust, more complex, more interesting projects.
Okay.
Whether that's a career path, learning a difficult skill, or maybe a creative endeavor, because you're not pressured for those immediate results.
Right, you're not constantly looking for that quick win.
Precisely. It lets you patiently wait for things to unfold naturally, and that often leads to those exponential cumulative results over time.
That makes sense, which kind of leads into the next pillar, doesn't it? Something that sounds purely financial, but applies everywhere. Risk and return assessment.
Absolutely. Investors, good ones anyway, pragmatically evaluate everything, every project, every event, based on potential risk versus potential return.
Not emotion.
Not emotion.
Yeah.
That's key. They're constantly asking, okay, what can I realistically lose here? What could I possibly win?
Mm-hmm.
And the speaker in our source material explicitly says that doing this, applying this pragmatism, it gradually reduces emotionality.
Interesting. So the process itself helps regulate emotions.
That's the idea. Consistent objective evaluation leads to better emotional control. It helps prevent those impulsive decisions driven by fear or greed,
Yeah.
especially in high-stakes situations.
Yeah, I can see that applying to so many things beyond money. Starting a business, moving cities.
Exactly.
Okay, so you're assessing risk. What's the next logical step to manage that risk? This brings us to diversification, another seemingly financial term.
Right, but again, much broader. It's not just about spreading investments across different stocks or bonds.
So not just for your 401k.
Definitely not.
Yeah.
It's about avoiding putting all your eggs in one basket in life. The core question becomes, okay, what if this path, this project, this relationship, what if it doesn't work out? What's my plan B?
Having options.
Exactly. It builds resilience, flexibility. For you listening, this could mean cultivating multiple skills in your career, right? So you're not tied to one niche.
Or maybe not relying on just one person for all your emotional support.
Precisely. Building a diverse support network. It's all about building robustness and adaptability for when things inevitably get uncertain.
Makes sense. Okay, so speaking of robustness, to make these smart decisions, especially when things are uncertain, what do investors rely on?
Data.
Data,
Yeah.
absolutely. Which leads us to analytical thinking.
Pillar number 4.
Yep. Investors rely on data, metrics, trends, ROI, return on investment. They prefer analysis over just guesswork or gut feelings.
So they do their homework.
Thoroughly. To make what they'd call an educated guess. It gives them a kind of foothold in an uncertain world.
Mm-hmm.
And the source material points out something interesting. even if one specific project or company fails, the investor understands it was sort of within the model.
Ah, okay.
Maybe other companies in the portfolio perform slightly better, leading to an overall recovery.
So it's about the system, not just the individual parts.
Yep.
Exactly. Meticulous analytical planning provides that systemic resilience. It's like a safety net. It allows for informed adjustments and keeping that broader view,
Yeah.
even when there are individual setbacks.
Okay, this next one. This one is probably my favorite. Curiosity.
Ah, yes. Crucial.
It feels like the engine driving all that analysis we just talked about.
I think it is in many ways. Investors are constantly exploring new sectors, new trends. Could be rocketry, could be chip manufacturing, could be coffee sales. Doesn't matter.
They just want to know.
They stay open to new ideas, even ideas that most people initially dismiss. Like, remember TikTok when MySpace was still kind of a thing?
Oh, yeah, everyone thought it was just for kids. Fleeting.
Right, but our source contrasts the dismissive, ugh, we used MySpace back in the day, with the investor's approach. Wait, what is this platform? Who's behind it? Can I buy stock?
Digging deeper.
That proactive engagement lets them spot emerging opportunities way before they become mainstream. Gives them a huge edge.
So curiosity isn't just about general knowledge, it's actually a strategic tool.
Exactly. A strategic radar for early decision-making. Huge competitive advantage.
And that ties perfectly, actually, into our next pillar, something that feels maybe a bit countercultural today. Patience and waiting.
Yeah, definitely countercultural. It's often seen as an undervalued skill, isn't it?
Totally, in our instant gratification world.
But after doing all that analysis, investors understand that real growth, significant growth, it just doesn't happen instantly.
Right.
Often, the best move is simply to wait, to let the processes develop.
Resisting the urge to tinker constantly.
Exactly. They avoid those constant emotional ups and downs and just let time do its work. The source explicitly says time works for them. And that, every day, little by little, month by month, year by year, brings them one or another penny. It's about that compounding effect again.
So patience isn't just passively enduring, it's actively leveraging time.
Perfectly put. Leveraging time as a strategic asset for significant long-term growth, whether that's financial, personal, skill development, whatever.
It really flips the script on how we often chase goals, doesn't it?
It really does.
Okay, and finally, pillar number 7. This one's inspired by the legendary Charlie Munger, the idea of avoiding foolishness.
Munger. Yeah, this is classic. It's about inversion, essentially. Thinking about the negative.
How so?
It involves constantly considering the negative scenario, actively asking, okay, what action or inaction would lead to the most terrible consequences?
And
then you just avoid doing that. Simple as that sounds.
So don't chase the obvious hype. Don't get involved in clear trash.
Pretty much, even if everyone else is piling in. The core idea, as the source puts it, is to just not do what might lead to the worst case scenario.
Just don't make obvious mistakes.
Exactly. It's like a strategic principle of subtraction. Sometimes eliminating the potential big screw-ups is way more effective than adding complex, fancy strategies.
So it's like simplifying, avoiding toxic relationships, getting rid of unproductive habits.
All of that fits. It's a kind of minimalist but really powerful approach to managing risk and setting yourself up for success. Basically, don't shoot yourself in the foot.
Right. Makes sense. Okay, so that's the framework, those 7 patterns of thinking. Powerful stuff.
Really is.
But theory is one thing. How do you actually apply this day to day? This is where that checklist comes in, right?
Yes. The 10-point investor checklist. And our source material gives it to us as this incredibly practical tool.
And crucially, not just for financial decisions.
No, for almost anything. The speaker in the video says having these checklists, even if they're just kind of in your head, makes it so much easier to deal with new situations, complex choices.
Okay, let's walk through it. Point 1.
First, what value does this create now or in the future?
And the key, the source says, it's not necessarily about money.
Exactly. Could be emotional value, fulfilling a dream, maybe just getting needed rest to recharge your batteries.
Yeah.
Value is broad.
Got it. Okay, point 2.
Is this an asset or a liability?
Ah, the classic distinction.
Right. And think about that analogy they used. A pickaxe or a stone.
Explain that.
Well, a pickaxe helps you gain resources, right?
Yeah.
It helps you build or acquire things. A stone is just a burden. It weighs you down.
So a hobby that recharges you, makes you feel good, that's an asset.
Definitely. But one that just drains your time and energy without any clear benefit, maybe leaves you more stressed, that starts looking like a liability.
Okay, makes sense. Point 3.
What is the potential ROI? return on investment.
But again, broader than just cash.
Absolutely. Return on your time investment, your effort, even your emotional resources. What are you getting back for what you put in?
Right. And point four.
What are the risks, and how do I control them?
So back to risk assessment, but now with a mitigation angle.
Exactly. Really thinking through
Hmm.
what could realistically go wrong here, and what steps can I take now to prepare for that or lessen the impact?
Planning for bumps in the road. Okay. Number five.
If this is successful, can I scale it or at least repeat it?
Ah, okay. Is this a sustainable win or just a lucky break?
Yeah. Is it a one-off fluke, something totally unique? Or is it a strategy, a process that you could potentially use again or even expand upon?
Interesting. And number six sounds pretty heavy.
It is, and it's critical. If I lose everything in this deal, how painful will it be for me?
Wow. That's the ultimate downside check.
It really is. It forces you to evaluate your ability to absorb the absolute worst-case scenario. Can you recover? Can you keep playing?
Because the goal, the source says, is to stay in the game as long as possible.
Exactly. Preserving your capital, whether that's financial capital, emotional capital, reputational capital, and ensuring your longevity in whatever game you're playing is paramount. Avoiding those catastrophic game-ending failures is often way more important than chasing maximum short-term gains.
Don't get wiped out. Got it. Okay, number seven.
Are there better alternatives in terms of risk-to-reward ratio?
Opportunity cost, basically.
Yep. Always compare your current option with other things you could be doing with those same resources, time, money, energy. Is this really the best use?
Makes sense. Number eight is interesting. Who is truly making money and who has the money?
Yeah, this one requires a bit of critical thinking about the system you're entering.
The source used NFTs as an example, right?
It did. Asking, were the buyers really profiting long-term, or was it mainly the sellers and platform creators?
So it forces you to look at the underlying dynamics. Where is the value actually flowing?
Exactly. And that applies to career choices, business ventures, even social trends you might jump on. Who really benefits here?
Good question to ask. Okay, number nine.
Does this help your strategy or distract from it?
Ah, staying focused.
Yeah. Remember, strategy is also defined by what you choose not to do. Does this cool new thing, this opportunity, actually align with your bigger plan? Or is it just shiny object syndrome, pulling you off course?
Resisting the hype if it doesn't fit. Okay. And finally, number 10. This one feels powerful.
It is. It's a great self-reflection tool. What will you say to yourself in 5 years after doing this activity?
Sort of projecting into the future and looking back.
Precisely. It's a cognitive tool that forces you to consider the likely long-term consequences of your actions now.
Encouraging thoughtful decisions, not impulsive ones.
Right. Decisions that align with who you want your future self to be, what goals and values you hold, rather than just what feels good or easy in the moment.
Wow. That is a comprehensive checklist.
It really covers a lot of ground.
So pulling this all together, what does it really mean for you listening? Our source material makes it super clear, doesn't it? This investor mindset, it truly goes way beyond just finance.
Oh, absolutely.
It applies to everyday purchases, career choices, where you decide to live, even relationships.
It implicitly reframes your entire life as a kind of portfolio of decisions.
Yeah, that's a great way to put it. Every choice has its potential risks, its potential returns, its long-term ripple effects. And it becomes about continuously strategically allocating your most valuable resources, your time, your energy, your focus, your relationships,
to maximize your long-term returns. And those returns might be happiness, fulfillment, personal growth.
Right. While at the same time minimizing the risks, things like regret, stagnation, missed opportunities.
So this whole deep dive, really, it's about understanding how to optimize your whole life using these principles.
Yeah. Powerful stuff.
Definitely.
So as we start to wrap up this deep dive, I mean, it feels pretty clear that this investor mindset isn't just a niche skill. It's a powerful framework for, well, success and effectiveness, really.
Agreed. Not just in finance, but genuinely in all aspects of life.
It's about adopting these patterns of thinking we talked about.
And using that practical checklist.
Exactly. Tools that empower you to make more rational, more long-term focused decisions. It fosters this mindset shift that just leads to better outcomes overall.
And if we sort of zoom out, connect this to the bigger picture,
Yeah.
it really underscores that knowledge is most valuable when you can understand it and, crucially, apply it across different fields.
Yeah, transferability.
Right. This whole discussion, encourages that critical thinking, questioning assumptions.
Yeah.
It reminds us there's always more to learn,
Yeah.
and looking at things from multiple perspectives just enriches our understanding, doesn't it?
It really does. So, as our source material wisely concludes, time is our ally. That really stuck with me.
Mm-hmm. A powerful statement.
So here's a thought for you to take away. What stands out to you about how time, specifically, can become your greatest asset when you start applying this investor mindset to your own life, your own decisions?
Interesting question to ponder.
We'd love to hear your thoughts, so please share them in the comments. And of course, if this deep dive sparked any aha moments for you,
If it made you think differently.
please give us a like and subscribe for more insights into strategic decision-making and personal growth.
We appreciate you tuning in.
Absolutely. Thank you for joining us on the deep dive.